JC, you mentioned on last night's call that we're not just seeing sector rotation, we're also seeing rotation among small and mid caps. Can you go into that a little bit?
Yeah, I keep hearing they're like, oh, JC, tech stocks are selling off, or communications or discretionaries are selling off. And as it turns out, it's actually not those sectors. It's the mega cap sectors that since early September were underperforming, right? After tremendous outperformance really throughout all of 2020 when the markets were crashing and when the markets were rallying. Those were really the leadership groups, and the areas that were struggling were the small caps and the mid caps, and those have been the best areas recently. And even when the large cap tech and large cap discretionary and communications were underperforming, we saw small cap tech, mid cap communications, all of those indexes were breaking out. So it wasn't so much the sectors themselves and money rotating out of them. It's really been a market capitalization rotation, and I think it's incredibly constructive for the overall market.
Did that surprise you to see those small and mid caps just surging sort of towards the end of the year?
It's really just comes down to math, right? We can't just have the market continuing to make new highs relentlessly and then small caps and financials breaking down to new lows. Like, that's just not the way bull markets, the way strong uptrending markets behave. Ultimately, we need that participation from the underperformers. And if you notice, here we're looking at a bubble chart where on the y-axis, we're showing the drawdown in the first quarter. In other words, the higher up on the chart, the better it did in the first quarter. And the lower down on the chart, the harder it got hit during the coronavirus crash. Notice at the top of the chart, what do you see? Large cap, mega cap, tech, growth. What do you see at the bottom? Small caps, mid caps, micro caps. Now, on the y-axis, we're looking at the percentage return since the beginning of September, when that rotation first got going. And over the last 3 months, who were the best winners? They're the ones over to the right. The ones that struggled the most are closest to the left of the chart. So what do you see all the way to the right? Small caps, mid caps, micro caps. What do you see all the way to the left? All those mega cap growth tech names have underperformed over the last 3 months. And it's really been the relentless outperformance out of smalls and mids and micros.
Okay, let's talk about the European stocks for a minute because it seems like they're getting in on the rally too. Did I understand correctly that Germany is at an all-time high?
Can you believe that? I was drinking Spätburgunder on Monday when I was going through my charts because I figured, it's a Monday, you want to keep it light, go with the Pinot Noir. And Germany making new all-time monthly closing highs, go with the Spätburgunder, save you a few bucks.
But I want to know, JC, real quick, if Germany is at an all-time high, bro, why didn't we just go to a beer? Just call it like it is. Like, why are you stretching and trying to make the wine work for you at this point?
I got to tell you, Julie, Germany makes some amazing wines. They make some of the best Riesling on planet Earth. And I got to tell you, listen, I know you're all bougie with your California and your French wine, but give the Germans a chance. They make some good Pinot Noir.
By the way, Japan at a 29-year high?
Not evidence of a downtrend, Julie. Go back all time, and when you see new highs, new multi-decade highs, they consistently show up in uptrends, not in downtrends. So again, that not just a sector rotation and market capitalization rotation that we mentioned before, but internationally, right? So the weaker dollar obviously helps that international trade, not to mention higher interest rates, where bank stocks and financials tend to benefit from those higher interest rates, and a lot of these countries around the world have a ton of banking exposure. They don't have these large weightings in tech like the United States does, so keep that in mind. Higher rates, lower dollar, I think that makes perfect sense with rotation into international markets. Japan included, Europe as well, New Zealand, go around the world, you're seeing it.
And let's talk about financials for a second. They continue to struggle, bigger picture, but is there anyone in there leading the charge for you?
You notice the broker dealers and exchanges index made all-time monthly closing highs, Julie. And I got to tell you, this is on the Mount Rushmore of the most important stock market indexes on earth. Whether you're a U.S. investor or you're somewhere else, this has to be on your radar. Now, here's the caveat. It's the exchanges that we want to focus on, not so much the broker dealers. And exchanges are technically broker dealers, but this is a market where everyone's opening new accounts, right? Options trading volume is off the charts, no pun intended or somewhat intended. And I mean, if the exchanges aren't doing well in this environment, when are they ever going to do well? So look at ICE, the Intercontinental Exchange, look at the NASDAQ, not the Qs, but like the actual company, the NASDAQ, and look at CME Group. These are all charts that are going from the lower left to the upper right. They don't look like regional banks, right? They look kind of like tech stocks, and it's because there's a lot of tech going on back there. It makes perfect sense.
All right, now I don't want to get too personal here. I know you get very heated about this topic. Gold and Bitcoin. You say that the people who are following it is like the people who are following a cult, and that if you could persuade a fool down the line to pay you more for it, but you are just not feeling these. Tell me about that.
Yeah, and listen, I don't take it personally. I mean, I really couldn't care less if we're buying Bitcoin or gold or yen or Microsoft or Apple or shorting Exxon. Like, I don't care at all. You know, these are just letters in math. I don't care if Bitcoin goes to 0 tomorrow. It can go to 1 million. Doesn't matter to me. Gold can disappear tomorrow. It could double. I don't care. We were long gold. We were long cryptocurrency, specifically Bitcoin. Both of them hit our targets. These were the former highs in gold from 2011, in Bitcoin from 2017. Those were our upside objectives. We wanted to take profits when we got there. We got there. We took profits. And apparently so did everybody else, because they've both been under pressure since achieving those highs. So I don't know. And for the record, I think both of them go on to make new all-time highs. I think both of them go substantially higher. But it doesn't matter what I think, right? Because we only want to be long once we've exceeded those former highs. That could be tomorrow. That could be next week. It could be in the second quarter. It could be never. I have no idea. So I'm going to sit back and I'm going to wait. There are plenty of other things to buy. I don't know if you heard, but Germany's making all-time highs. Industrials are making new all-time highs. Transportation stocks. There's plenty of things that are working that we don't have to put our money in a useless rock that's sitting beneath overhead supply or an almost useless currency. Again, beneath overhead supply, there's just better places to be. And when you see those new highs, you see the breakout from the former highs, my computer's gonna make all sorts of funny sounds, and that's the heads up. Hey, time to get in precious metals again. Hey, time to get in Bitcoin again. I just don't know what that is. So I don't think that we need to be in a rush. I don't think that we need to be as part of like a religion or a cult. Like, that's silly. Right? We want to remain objective, because once you start getting into religion, you can't have a logical conversation with these people. It's like the perma bears. Like, no matter how many times they're proven wrong, they're still going to come up with something for why they don't own stock. So, you know, you can't have conversations with those people. So we just follow price.
I know you had mentioned on the call base metals. I just want to talk about that for a minute because that got my attention. Base metals in correlation with emerging markets, BRICS. Sort of, what do you see as the through line there?
You know you're old school, Julie, when you talk about the BRICS, because the kids these days, they don't know about that. They're into the FANG. They don't know anything about the BRICS, right? For you kids listening out there, the BRICS were the FANGs before the FANGs, right? Back in the day in 03, 04, 05, when I got in this business, man, these emerging markets were ripping. Brazil, Russia, India, China, South Africa, South Korea. I mean, these were the names, right? Okay, so emerging markets are very highly correlated with copper, which, by the way, is making new 7-year highs. You know what's not making new 7-year highs? Gold, right? So when you look at a basket of base metals, copper, aluminum, zinc, lead, tin, nickel, and you compare them to a basket of precious metals, silver, platinum, gold, base metals are squeezing higher. So if you're asking me, which one would we rather be in? Which rock would you rather own, or which group of rocks would you rather own? I'd rather be in the base metals than in the precious metals. And to me, that continues to reiterate that global growth story, rotation into industrials, rotation into emerging markets. To me, all that's the same story.
Okay, well, looking forward to the month of December, what are you particularly having your eyes on?
Well, this is historically a great time of the year, right? The sweet spot of the best 3 months, as we call it. Everybody likes to say, you know, hey, sell in May and go away, but they never remember to buy in November. That's the real one. And November, the month of November was like one of the top 25 greatest months in the history of the stock market, by the way. A little bit under the radar, and that's just in the US. Some of these European, I mean, you see Italy, man, ripper. So what am I looking for? I'm looking for renewed strength, right? And I'm looking for maybe a rollover in rates or a spike in bonds, some sort of like defensive move that we are not anticipating, some sort of like rotation, maybe into staples on a relative basis, some sort of defensive rotation that we have yet to see that's going to say, hey, Maybe we shouldn't be as aggressive as we have been, but so far we haven't seen that. So even though we're looking for it, we are looking for it, but we're not just going to sell just because we think it may be coming. Another thing I'd like to bring up is sentiment. Sentiment's a bit stretched in the short term, so there's a lot of bulls when there weren't 6 months ago, right? So that sentiment has shifted. So I would look to see if that's going to impact the market, but sentiment can remain extreme for a long, long time. So price is what we're focused on. Price pays, and if we see the prices of some of these defensive areas catching a bid, that'll be a heads up that something may be changing.
All right, well, we look forward to the month of December. JC, thank you so much. For All-Star Charts, I'm Julie Alexandria, and for all of the latest, be sure to check out allstarcharts.com.
Adios.